Broadcast is now starting. All attendees are in listen-only mode.
Good morning, everybody, and happy Friday. My name is Allie Campbell. I am one of the annuity sales directors here at IAMS, and I'm joined here today with Dustin Carlson from F&G. Super excited for him to share with you guys the new Power Accumulator product. First, I want to start off by saying thank you guys for joining us here today on your Friday, taking the time to learn about this new product. But also wanted to mention, if you have any questions during this webinar, just go ahead and jot those down to save some time, and I'll go ahead and follow up with each and every one of you later today to answer any questions that you may have had. Before diving into this F&G Power Accumulator product, we are going to go over a few housekeeping things, so stuff we offer to our agents here at IAMS. All right, so first, just as you know, referrals are what help you grow your business. They are also super important to us. So with our Referred Producer program here, we pay you $50 when any agent you refer contracts with us. And then we also continue to pay you 20 basis points every time they write a piece of business with us. So that's not going to be coming from any of their commissions, your commissions. That's coming straight from us as a way for us to say thank you for the referral. We really do appreciate it. We also have our marketing reimbursement program here. So every $100,000 of indexed annuity premium, we pay you $100 towards your marketing reimbursement account. So again, just another way of us to say thank you for your business. So we also have our new producer bonus. So you qualify with for this within the first 6 months of being contracted with us here at IAMS. And as you can see here, there's 3 different levels that you can cash out at. So 100,000, 300,000, and 500,000. And this is going to be of indexed premium or single premium life. And so as you can see, there's anywhere from $750 cash bonus, the newest iPad, to different seminar packages or a Ritz-Carlton package for you and a guest to go wherever you desire. So again, just a way for us to say we really do appreciate your business and thank you. So next here, we have a great back office support. Our number one thing here is going to be service. So we have a 3-ring guarantee that a live person is going to answer you within 3 rings during the business hours. And we always say submission to commission. So helping producers save time with any case design, product selection, doing illustrations, helping them get contracted, all the way to submitting business. And then Amber's team here, the annuity new business team, they do a great job here of scrubbing applications, making sure we're sending everything to the carrier in good order, and then following up all the way until the application has been delivered. So we also have our creative marketing solutions team here. So that's going to be Jacob and Sean. They do an awesome job with logo design, creating flyers, helping build websites and maintenance on those websites. Basically anything to help you brand yourself in your community. So like I said, logo design and then branding different flyers, a website, all of that stuff with your specific logo and branding. So they do an awesome job there. If you have not had a chance to speak with Jacob or Sean, I highly encourage you to do so. They do an awesome job. So next is our IAMS website. You're going to find a lot of great tools on here. We have multiple different quoting tools. So the term quoter, the income rider comparison, I use that one a lot. It's on from Annuity Rate Watch. So if you're looking for a carrier that basically highest guaranteed income, you go to the income rider comparison, type in the information, name, age, how much premium, when they want to start income, and it's going to generate exactly which carriers are going to pay out the highest guaranteed amount based on your client's specifics there. So we also have the sales resource library. on our website, and that includes tons of great client brochures, fact finders, different financial calculators. So that's another thing where if you haven't been to our sales resource library on our website, I highly encourage you to do so because you're going to find a ton of great pieces on there that you can share with your clients. So our IAMS Wealth Management, that is going to be an RIA that we have here in our office. The number one thing here with IAMS Wealth Management is basically helping you with client retention and being able to offer a full range of services to your clients. So this is a great opportunity for anyone looking to get their Series 65. It's going to be all fee-based. And this is actually where we're going to have our first poll question here. So would you like more information on IAMS Wealth Management? I'll go ahead and launch that, give you some time to vote on that. So I'll give you an example of when this really comes in handy. So say you have a client and they have about $300,000 of funds, investable funds. So only $150,000 of that, let's say, can go into an annuity. Well, you're going to have $150,000 left, which either you're going to have to recommend them to go somewhere else, or they're just going to go somewhere else to have them take over those funds. So this gives you a chance to basically retain those clients and have all of their funds in one place. So go ahead and answer that. I'll leave it open for about another 10 seconds here. All right, perfect, thank you. All right, so next is going to be our Life and Annuity Academy. So this is a 2-day, all expense paid producer training. We do about 4 of them a quarter. This is going to be a great opportunity for any agents who are active in the life and or annuity markets looking to increase their sales. So a lot of what we focus on here at the Academy, it's not going to be so much product based, but it's going to be more sales techniques and ideas to help you grow your business. So like I said, this is going to be a 2-day producer training. This is going to be our next poll question here. So would you like to learn more information on the IAMS Life and Annuity Academy? I just launched that. If you could go ahead and answer that. So we just had one in October, I believe it was September. So we're going to be having our next one next quarter in March. We still have not figured out the final details on that, but we will have that out soon. So we bring in 4 of our top producers and they kind of say how they got from A to Z, where they are now, share a bunch of their sales techniques and ideas. So it's a really great opportunity if you're looking to grow your business here. So if you could go ahead and answer that poll question. And again, if you have any questions on any of this, I'd be happy to answer those for you later today when I follow up with you. All right, I will go ahead and close out that one and we'll move on here. So this is going to be the Montage trip to Los Cabos. This is an IAMS and Athene trip. So this is going to be a $3.5 million production to qualify for it. So this is going to take place August 26th through the 29th of 2020. The qualification period is going to be July 1st of 2019 to June 30th of 2020. And actually right now for the month of November and December, we have double trip credits. So any business issued with Athene in November or December is going to count towards double trip credits. So great trip there. If you're interested in that, give me a call. I'll get you some more information on that. So next is going to be our producer escape. This is going to be in 2021. This is the IAMS trip. So qualification for this is going to be $3.5 million. Qualification period started at the same time, July 1st of 2019, and it runs, this is an 18-month qualification period, so it runs through December 31st of 2020. We actually did finalize the location this week, and we're going to be announcing that next week, so pretty exciting news there. If you would like more information on that, I can definitely get you that out to you next week. All right, we are going to switch over to Dustin here as he is going to share with us the information on the new F&G Power
Thank you. Show my screen here. All right, which screen do you see, Allie? My PowerPoint or the GoToWebinar?
GoToWebinar.
Okay, all right, let me move this over to the other screen then. Get that going for you. All right. Yeah, that Montage resorts are pretty awesome. And being that my wife works in the sales department at Athene, I'm hoping I get a piggyback on that at some point and hang out with you guys in Los Cabos. But anyways, so let's get this webinar, or my part of the webinar, started here. Let's see, switch this over. Excuse me, sorry for the delay. All right, so obviously we have a great partnership with IAMS, and Allie's been a great new addition to their team. All the advisors on the phone, thank you for your time. I know you should all be out there selling, but you wanted to learn about our new product, so thank you for spending a few minutes of your time. Quick agenda, why F&G, why now? Some of this may be a reintroduction for advisors that have done business with us in the past. Maybe a true introduction to us for people that have not. We'll go over some advisor perks and then get down in the nitty-gritty on our new Power Accumulator 7 and 10 product. So briefly, an F&G overview. We've been in the business for over 60 years. Most recently, I think the numbers have indicated, we're at number 4 in the IMO channel in overall production. So definitely have the pedigree of a top carrier. We received our A- rating last November, so we've almost had it a year. And if you listen to our earnings call yesterday or any previous quarter this year, our CEO doesn't think that we're stopping just at A-. We have to sit at A- for a little while before AM Best will upgrade that to an A, but I think we're well capitalized and it's just a matter of time. As far as the strategic bullet point down there, when we were most recently purchased roughly 3 years ago, I still get the question on a weekly basis, are you owned by a Chinese firm? We were rumored to be in a deal with them. Luckily, that deal did not go through, and we were purchased by an American corporation, CF Corp. Chin Chu and Bill Foley from Blackstone formed an organization, bought it from Harbinger, and then took us public. So FGL is our ticker symbol. Our stock's been performing pretty well, actually, over the last week or 2 weeks. And so the advantage that we get from a relationship like those two gentlemen from BlackRock, and BlackRock themselves owns about 20% of our company or of our shares, is their investment expertise, access to capital, and hopefully a lower fee structure rather than paying a third party to invest on our behalf. So what that means to you and your clients is we're pouring everything we got back into the product, commissions, etc. So I really feel like the new ownership group, it being American owned, A- rating, we're one of the top carriers. I think we're heading in the right direction. So starting with perks, you help people retire every single day. Who's looking out for your retirement? I know it's kind of a cheesy line, but at the same time, that's exactly what this is. When other carriers here in the last few years have decided to get rid of their deferred comp plans, their trips, we have decided not to get rid of those trips. We're doubling down, and it's a long-term initiative of ours. So a quick look at our deferred comp plan. I have roughly 2 slides on this. So if you have any more questions, I'll have you reach directly out to Allie on this. But I always like to show an example to get the point across. But we've had this program, it's called Power Producer, since 2011. And since then, we've made over 28 millionaires in the program. And I'd venture to say, based upon production trends I'm seeing, we'll probably make another 7 to 10 millionaires out of this program again this year. So what we do is, based upon production, and minimum is 1.75 million of FIA, we give you credits, and those credits are worth anywhere between $3,000 and $5,000, and we credit your deferred comp account with the $3,000 to $5,000. Now it's based upon company performance, and we typically make our deposits in March of every year. So the example that I like to point out when presenting this is qualifying year 1 and qualifying year 2. In qualifying year 1, you see a deposit of $3,750, and that's the arbitrary number we gave in this hypothetical example for our credits in that first year. So this is an advisor doing the bare minimum $1.75 million with us each year for 6 years. So, and when I first got to F&G, I didn't think $3,750 sounded like a lot for $1.75 million worth of production. But we have what's called a persistency credit. So any business from the year prior that stays on the books, you know, it's not surrendered, canceled, free looked, whatever the situation is by the client, we'll give you credit for that in subsequent years. So in qualifying year 1, we gave $3,750. Agent did another $1.75 million in year 2. But you'll see a second deposit of $3,750 in year 2, and that would be that persistency credit, because business from year 1 stayed on the books in year 2. So the ending balance after year 2 in your deferred comp account would be $11,250. So you can see, as that business stays on the books, you keep producing with us over the 6-year vesting period, how that account can quickly grow. To really drive the point home, I'd ask you to send Allie an email right now and get a copy of this calculator. I'm going to show you the power of it. And this is a screenshot. I'm not going to do a live scenario, but this is a hypothetical example. It's an Excel spreadsheet. So as you can see here in the middle of the page where my cursor is, we're putting in annual annuity sales of $3.5 million. And also annual life sales do count, and that's on target premium. And for every dollar of target premium, that actually is on a factor of 15. So we're incentivizing the life side heavily. So definitely take a look at our life portfolio as well. But for this purpose, we're just using annuity dollars. So $3.5 million of annuity. Hypothetical account interest rate is 5%. So what we're doing there is we're establishing an account for you at Principal Financial Group. And there's roughly 20 ETFs that you can choose from to invest your money in. In this drop down, you can go from 0 to 10%. I just chose the median of 5. And then the credit value, as I said, typically it's between $3,000 and $5,000. Split the difference at $4,000 of credit. So if you look down here at the printout or the output, 3.5 gets you 2 credits a year. The power producer credit value for that year was $4,000, thus giving you $8,000 for that year. In year 2, another 2 credits were earned, $4,000 of credit. I've given you $16,000 for that because of the persistency credit, and a total account balance of $24,000. Now, as mentioned, it is on a vesting schedule, as you can see with the cursor here. But at the end of year 6, your accumulated contributions are $168,000. Your hypothetical account value is $182 if you're earning 5% on your money, or fast forward to year 10. You know, if you got 10 years left in the business, this is going to apply to you. If you're just getting started in the business, I mean, this is going to go way beyond 10 years. So, but at the end of 10 years, you get roughly $500,000 in your account. And you've contributed no monetary contributions to this plan. This is all our non-qualified dollars being dumped in for you. So a couple more seconds to write down Allie's email address and just fire her off an email to get that Excel spreadsheet from her. Quick look at our trip. It is a 4 Seasons resort, you know, obviously a top resort across the world. And Costa Rica here is one of the top 3 in the entire world. So not sure if y'all have production in here year to date, or if you can get to $3.5 million by the end of the year. But this is going to be an amazing trip. So we have not determined where we're going in 2020, or well, 2021 technically. But stay tuned for that. Would love to sip a Mai Tai with you on that beach there. So as mentioned, I used to work at an IMO before I came here, and I had roughly 30 carriers at my disposal, which meant 10 products a carrier. And I'm sure there's a decent amount of advisors out there that are contracted with a number of carriers as well. But the way that I approached my offerings was, all right, let me develop a top 5 carrier list. F&G was one of those. And then let me try to come up with a niche or a go-to product in each of those carriers. And when I thought about F&G, I thought about them having a solution really for pretty much every situation. Currently, we don't have increasing income. I think you'll see that from us in the near future. But currently, we do not have that. So that'd be one thing we couldn't offer you. But most every other scenario we can. And this is a look at our entire portfolio here. You have accumulation on the left. We just added the Power Accumulator. We have the Accumulator Plus 7 and 10, which is also a very strong product. If you're looking for performance-driven income, hedging against those inflation costs, healthcare inflation taxes, that sort of thing, Accelerator Plus is probably going to be the best product for you. We also have Performance Pro, Retirement Pro, and then lastly, Guaranteed Income. Ali mentioned that they do have that income tool there for guaranteed income. In most scenarios, we're going to be top 1, 2, or 3 with the Safe Income Plus. And what I'd encourage you to do is if we're, a few hundred or a few $1,000s off a year, go into our software and actually, since we credit or compound daily, we have a 7% compounding, we'll credit the client for, let's say they want to turn on income in year 3, month 10. With most carriers, they go back to what the previous value was at end of year 3. We'll actually give them the compounded daily rate for 3 years and 10 months. So you may see it on a calculator where we're a few $100s behind or whatever. But to really get a true picture, dive into our software and dial up what month the client actually wants to take income. And I can almost bet that we're going to come out on top. So the reason that we're here today, and I'll try to keep this short, and my disclosure is if there's any questions that you have, I can take those at the end, or Ali is an awesome resource, so please reach out to her on this, and then we can always connect at a later time. So we have 2 accumulator products. Want to make sure that you know that, so when you go in to our website, you can say, which product was he talking about? And we have the Accumulator Plus. It's probably the top accumulation product in the industry right now by volume. We're seeing significant amount of premium come from our carrier competitors because it is pretty much the only accumulation solution out there with a decent rate. And that would be in the Barclays Trailblazer. It's uncapped growth with 0 spread, 2-year point-to-point. Year-to-date, it's up roughly 14%. We're applying 140% par rate, which ends up being roughly, like 19% year-to-date. On a true 2-year look back, that thing is up 10%. Applying the 14% par rate, it's up over 14. But in the Power Accumulator, we have our own proprietary index in the Balanced Asset 10. That is up 20% year-to-date, believe it or not. And I'll get into that in just a moment. But we also have iShares, BlackRock iShares. So if you're not familiar with the BlackRock story, I'll definitely familiarize it with you today. But 1 in 3 clients and investors out there in the country own an ETF, and roughly half of those are BlackRock iShares. So if you're not talking ETFs with your customers, I can almost guarantee somebody else out there is. So it's a great way for you to be able to offer a product that your clients are more than likely, or at least an ETF that they're used to. So the 3 things I want you to remember, it's cutting edge, first of its kind. The reason being is it's built on ETFs, iShares by BlackRock. We have the ability for you to construct a portfolio if you'd like. We also have the check-the-box solution with the Balanced Asset 10. This is a simple, easy to understand product. It's the same chassis as the Accumulator Plus. No bonuses, no fees, not a whole lot to it except we're pouring everything we got into the accumulation. And then lastly, transparency. And I know a number of people on the line may be looking for a transparent product that you can present to a customer that has real historical returns. I know a lot of people are struggling out there to be able to do that. Most of the time, your go-to is the S&P 500, right? Because it goes back 60 plus years, whatever the number is. Well, the thing about iShares is they've been around, and in our offering anyways, 14 years is the minimum, and the core S&P has been around actually for 19 years. So you do have true historical returns that you can show your client on these ETFs. An introduction to BlackRock. They've been around for over 20 plus years. They've had ETFs or iShares since 1997. And these numbers are from March 31st of this year. And when we were out in Midtown Manhattan a couple weeks ago, they actually told us that that 6.3 number went up to 7 trillion. Not that that means much to me in my bank account, but just showing you the growth of the industry and the growth of BlackRock themselves. And then in the bottom right-hand corner, what I'd point out there is that 1.92 number crossed over 2 while we were in Midtown. And, you know, really they are increasing AUM across all sectors, all asset classes. So really a growing story for your clients. I'm sure they're hearing about it one way or the other. And I guess one other key point, you know, roughly 13,500 employees at BlackRock, and they've dedicated 270 people to their insurance arm. So you may see the BlackRock name with other carriers. They haven't integrated iShares into those products, which would be the main difference. But nonetheless, they have 270 people dedicated to this business. So a brief overview of the product. This is a look at some of our collateral that we have. You know, first-class pieces to put in front of your clients. Great agent guides to help you understand the nuts and bolts. But really, it's on an annuity chassis, and I think that's important to talk about here. We're not directly investing in ETFs. We're buying options that mimic those ETFs. So you're still getting the principal protection, the tax deferral, the guarantees, you know, zero's your hero, and the liquidity added as you would get with any other FIA. So I'll start at the bottom here. You know, this is the evolution of integrating ETFs inside of an FIA. You know, everybody had an S&P 500 annual point-to-point in the late 90s, early 2000s. You know, S&P is actually very volatile, but it is time-tested, transparent returns, and people trust the S&P 500. And then, you know, roughly in 2015, you saw the advent of a lot of advisors allocating to alternative indices, and they've since exploded. There's over 100 in the industry now. You know, low volatility, which is nice, a smoother ride. Newer history, our Barclays is roughly 3.5 years old. The rest is back tested. And then you have rules-based theories. You know, smart alpha is what they call it in the Barclays. And then you have, you know, professional management. The ETF story combines a little bit of both of those. You do have volatility. They are time-tested, transparent, and because of the historical returns, there's more trust involved in those indices, in those iShares. If you're not familiar with ETFs, I won't spend a ton of time because I'm sure most of you are, but 1 in 3 investors in America, as stated earlier, owns an ETF, and BlackRock owns a great portion of that business, roughly half. So with an ETF, you know, you have a mutual fund on one side, the stock on the other, and with a stock you can trade intraday. Mutual fund is only one time a day. So the benefit of a mutual fund, though, is you can get a diversified portfolio with one fund, whereas you'd have to purchase a number of stocks to get diversification, right? So ETFs combine both of those, the diversification, the ability to trade intraday, all in one. One thing I want to show you on this is a growing industry. They're projecting $7.6 trillion in ETFs by the end of next year. And I think they're predicting even higher growth, 10 extra trillion on top of that over the next 5 by 2024. So again, if you're not talking about this story, at least, somebody else is. Getting into the simplistic nature of this product, as mentioned before, it's benchmarked to real returns. We're not paying a fee to have access to anything inside of this product. It's very trackable and transparent with historical returns at least 14 years old. And no caps to explain, it's completely uncapped. So here's the nitty gritty. We're featuring 4 iShare ETFs with 1- and 2-year options. It's all uncapped. The 2-year options do have spreads, and I'll show you those in just a minute here. We do have a fixed crediting option, and it's on a 7- and 10-year chassis. So in those light states that require 1010 compliance, we obviously are 1010 compliant, and this is approved in most all states. I think there's just a couple states that have not approved it. Connecticut would be one, and you'll have to reach out to Allie to find out the other 2. But the 7-year product is also very nice because that is definitely 1010 compliant for you. The surrender charges start out at 9%. Now, the only other thing I'd point out on this slide would be how other carriers have nursing home waivers and terminal illness waivers. We have that as well, but to help you as an advisor, you're sitting across the table from a customer and they're worried about healthcare costs in the future. And last thing a client wants to do, any person wants to do, is go to a nursing home if they can prevent it, right? Well, we have a home health care waiver in all of our products, including the Power Accumulator. And what the home health care waiver does is the client has to be in the contract for a year. After a year, if they cannot perform 2 of 6 activities of daily living, they can get their full accumulation value with no MVA or surrender charge. So the key point to you, or for you, is to understand that sitting across the table from a client during the sales meeting, you're going to be able to give them full liquidity access to their accumulation value in the event that they have that sort of health concern. They don't have to go to the nursing home necessarily. If the accumulation value in this product is going to help them bring a nurse into the home, this product can provide that. So great value add for you as an advisor in the field to offer your clients. 10% penalty-free withdrawals, by the way. So here's a look at our offerings for index allocations. You can see we have 2 equity components, and these are all ticker symbols that you see here, starting with IVV and down. So you can go out to Bloomberg or CNBC, whatever your favorite app is, and look at the history on these. You can see this IVV, which is their core S&P fund, has been around since 2000. The international exposure with the EFA has been around since 2001. Then we have a couple alternative indices. As mentioned, you can construct a portfolio essentially with this Power Accumulator. So real estate is a hedge and gold is also a hedge. Gold is the youngest offering we have at 14%. Now, we do have the Balanced Asset 10, and if I'm you in the field right now, I feel like this is probably the index that I would choose initially, and I'll show you why. Due to the interest rate environment, some of these par rates up here are currently not competitive, but I checked on the 10-year Treasury today, which is what most carriers use to price product, and it's approaching 2% when it was down to 1.4 earlier. I mean, what an amazing run here. So if that holds, I think you'll see our par rates skyrocket. So with Balanced Asset 10, it's a 60-40 blend of the same iShare up here, the core S&P. So essentially 60% in the S&P 500 and 40% in 20-year Treasuries. And this is their own iShare ETF. So you still have that historical return history there. And even though this Balanced Asset 10 has only been around for 3 months, these iShares have been around for 17 and 19 years respectively. So you're going to be able to have that type of conversation with the customer that really wants to see those historical returns. Here's a look at the 4 ETFs, and then we'll touch on the balanced asset, 10. Over the last 10 years, the core S&P has been up 7.79%. The EFA, which is the international, well, they're saying here the foreign large blend ETF, it actually hasn't performed amazing, but 3.73%. Real estate's done fairly well, 7.79%. And your gold, not too shabby either, 4.84%. Getting into the balanced asset 10. Now the 10 in this product name, sorry about that, is it's Volatility Trigger. So most low volatility indices out there offer 5% vol. Makes it a smooth ride, right? You have a 5% volatility trigger, but it does limit your upside potential. And there's roughly, I don't know, two carriers, I believe, that offer 10% vol. This product does that as well. So if you're looking for higher upside potential, this is going to be your go-to. So 60-40 blend, as mentioned before, we're rebalancing on a monthly basis. Volatility is controlled at 10%, and this is exclusive to F&G and no other carrier. So great opportunity for us to build with a national brand like BlackRock. Here's a look at this index. Now, over the last 10 years, it's been up 10.61. As mentioned, year to date, it is up over 20. So real historical returns showing a pretty good gains inside of an FIA when you apply the par rates that we have. What I point out here is, 10% volatility trigger, what that looked like over the last, 15 years, roughly gave 8.09% rate of return. And where that gray bar is, that was during the economic crisis, of course, weathered that storm pretty well. So love the volatility control in this, and limiting those upswings and downswings of the market. Here's a look at our 10-year product. We have 1- and 2-year options in each of these ETFs except for gold. The par rate, I think if I'm looking at this, the 2-year is probably going to be the best in the S&P 500, roughly illustrating at 4.5, which overall in the industry, typically what the average is with all carriers, no matter what kind of index allocation you have, they're typically aiming between 4 and 6%, and that is definitely well within that range. And due to the interest rate environment, I feel like once you see the uptick in the interest rates, you'll see these rates go up pretty quickly as well. An example would be American Equity has their S&P par rate. It's down to 25%. This is subject to that same volatility, so I think that's why you see us at 27. The EFA, we also have the international exposure there, and I guess I should explain the spread. So essentially, we're giving you in that MSCI EFA 2-year point-to-point, 80% participation with a 5.9 spread. So whatever the gain is in the contract, we're going to take the first 5.9 off. Same thing with the real estate. It's up over at 5% on the most recent 10. Gold lagging behind there at 2.46, and you can see why I'm harping on the balanced asset 10 right now. This is an index we felt that we had to have in order for this product to be released in the current interest rate environment. Full disclosure, I think we were really wanting to release this product back in July. We just couldn't pin down pricing because of the inverted yield curve and everything we were going through as an industry. So what this balanced asset 10 index does is it provides a volatility trigger, thus creating a nice option budget, a predictable option budget, so we're able to better price it. So what you see here in the 1 year is a 47% par, And as mentioned, it's made of S&P and 20-year Treasury, so it's going to have an illustrated rate of 5.48%. Then you also have in the 2-year, you're given 100% par, 5% spread. Right now, the illustrated rate is 7.83. Here's a look at our 7-year doesn't fall off that much from par rates, just a couple bips here and there. So the illustrated rate is going to be the same. So and really, we have a number of different opportunities for you to get familiar with this first of its kind product. You know, we obviously have illustrations, but as an advisor with F&G, and I'll be providing these links to Allie here. I'm supposed to be getting them today from BlackRock, but they have retirement planning tools. They have a Social Security planning tool that they had purchased actually from the Social Security Administration themselves. So a lot of free tools that you have available to you just for being contracted with IAMS and F&G. First class material, like I said, if any of you on the phone are using Retire Up, we do have this available on Retire Up. And if you are not using Retire Up, I'd highly encourage you to do that as well. We are having 2 webinars, one on the 19th and one on the 21st of this month. So you'll see those in your email boxes here soon. So get signed up. It's basically planning software that can be manipulated right in front of the customer to come up with any scenario that you deem fit from that meeting. So what I'd tell you is, you know, it's an innovative product built on iShares by BlackRock, a household name in the industry, especially in the investment arena with those customers that, you know, 1 in 3 own an ETF, let alone half of those being an iShare. Simplistic, no caps or fees, transparent, it's based on real returns. So, you know, with that said, you know, Allie, if there's any questions that have come about at this point, I'd be more than happy to take those. Otherwise, that's my material for today. And, you know, thank you everyone for spending time away from your practice to be with us here on the line.
Perfect. Thank you, Dustin. That was great. It doesn't look like we have any questions as of right now. But again, I'm going to be following up with each and every one of you. So if you do have questions, I would be happy to answer those for you and get you out any additional information you need. And that's going to bring us to our last poll question here. Would you like some more information on this product we talked about today? Let me bring it back here. I went ahead and launched that poll, so if everyone could go and answer that. Thank you again, everyone, for joining us. Thank you, Dustin. And I will go ahead and send each of you the Power Producer calculator on that Excel spreadsheet as well that he mentioned earlier today, just so that you all have that and can take a look at that yourselves. But if everyone could go and answer that poll question, and then we can close that out. I'll leave it up here for about 10 more seconds. All right, I will go ahead and close that out. Thank you guys again for joining us. Thank you, Dustin, for sharing that information with us. I'll follow up with all of you and get you all out some additional information on that.
Thanks, Allie.